Sunil Subramaniam, Managing Director and CEO with Sundaram Mutual Fund. Mahantesh Sabarad, Independent Analyst who tracks the banking sector and the financial sector closely, joins us now. Sunil, you're not directly a listed AMC, so we can understand from you in terms of what the growth rate are, what the numbers are. The general view, and I'm going to start with the view in the market, is that AMC is a great business. It generates annuity income. It's a business which does not require too much of capital to grow. But the honeymoon period is behind us, which is spreads are coming under pressure, PMSs are eating into market share, and in general, as the market will expand, ETFs will start growing where commissions are low.
I think all of that you say is right, Nikunj. This is not a financially high leverage business, but it's an operationally high leverage business. So to the extent of the annuity, you have to recollect that with penetration being so low and with the need to expand into rural India, urban India, expanding, there are a lot of investment that needs to be done and which your industry is doing. So fixed costs are going up, though they don't have any borrowing, not the interest part of it, but fixed costs are going up because as you seek to expand, that's number one. So in a higher operating leverage business, the fixed cost goes up, then your margins, incremental margins until scale builds up. So I think the industry is investing for the future in terms of expanding its reach. That's number one. Number two, the point about ETFs you mentioned, it's not just about ETFs, Nikunj. It's also about the institutional play. The provident fund money, as the government has allowed a leeway to come in. All of this comes in either in ETFs or index funds or in the direct plans of large size AMCs, right? Where the margins are naturally lower. So that's the second thing. The industry is expanding, but at lower margins. That's also correct. The third thing, Nikunj, which has to be borne in mind is that since 2018, I think I remember right, second half, SEBI had taken away upfront commission and moved the industry into a all-trail model, right? So to that extent that the historic assets where the upfronts were paid and were at lower trail because you gave higher upfront compensated by a lower trail income, to the extent that newer assets being accreted by the industry are all in a full trail model, naturally those margins of the historic margin. So you look at the margins on incremental assets versus margins on historic base, naturally they are lower, and that's the phase through which we are passing. But as scale builds up, all the investment you made in reach will pay off. And ultimately, I think the industry will mature into that annuity-based business. But now it's still the growth expansion mode, and the cost of growth has to be absorbed by the AMCs. So it's an investment for the future.
Right.
I would say don't look at the short-term drop too negatively.
Right. Mahantesh, is that your sense as well? Is the time to buy AMC stocks now when the market is not chasing after them?
No, I don't think AMC stocks really provide any great value for equity investors because there are kind of equity investors who look for growth and a substantial growth coming in from the AMC business that was promised when they listed has not come in. Partly because we have had this pandemic phenomenon where a lot of stress came in by the way of the markets itself going down. That, mind you, shrinks the margins for the AMC companies while the penetration is still gradually growing. There is also another phenomenon that is happening is what Nikunj talked about. Meaningful competition is now coming in the form of pension funds who directly invest in equity. Meaningful competition is coming from PMS funds as well. And there are a lot of investors who are moving towards these kinds of saving tools than really mutual funds. And to be a little critical about the mutual fund industry is that they have not delivered great outperformance to the underlying indices, and that's why we find a lot of index funds gaining prominence. So that blame, I believe, lies with the AMCs themselves in the form of their fund management team and the way they are investing. So all these factors tell me that the industry growth, AMC industry growth, will be quite constrained in the next few years, and therefore not a great investor proposition right now.
Sunil, let's look at the SIP number. The number is increasing. The number can be calculated. Market share number is available on a quarterly basis. So you pretty much know that which way the flywheel is moving for AMCs. If SIPs are increasing, if equity investments are increasing, if millennials are investing more into mutual funds, why is that not translating into some kind of an gusto? All I'm saying, Sunil, is that if the highway for wealth creation via equities is looking so strong, and if this is a mega trend, why are stock markets dismissing it?
A question for me, Nikunj?
That's right, Sunil. Only one Sunil. There's always one Sunil.
No, I think the reason is that when these AMCs were listed, the kind of projections made, I think honestly, those are not being lived up to. And I agree with my fellow panelists there that the high growth industry, so, high growth is in terms of top line. But high growth in terms of bottom line hasn't translated. And of course, for the reasons that I delineated in my first reply, right? The industry is building scale and they're investing heavily. The top line is growing, but a significant portion of top line comes from passive, which is lower margins. And like I said, the historic cushion that we had of upfront based high upfronts but lower trail is withering away. So to that extent, the growth industry is a growth industry, but is it an EPS growth industry? Because the top line is growing. Like I said, give it time. So the market is still not yet recognizing that. They expected a very high growth in both top line and in bottom line, but that's not translating for the reasons I said. But like I said, it's fixed costs, which is getting incurred. In about 2 years, 3 years time, I think those will all begin to pay off. So to my viewpoint, yes, the industry hasn't lived up to the hype that came during listing of the initial set of AMCs, but that doesn't mean that the industry is losing ground. I mean, PMS is there. That's for the HNI segment, AIFs and PMSs. Provident funds who directly invest, but there are lots of provident funds which invest. And recently, SEBI has just opened it up that public sector companies, provident funds can invest in non-public sector AMCs too. That was a big hindrance for that. Only a few public sector AMCs were benefiting. Now the entire industry will benefit. So I would say the growth prospects along with the equity outlook being so promising for the country are very good. The industry doesn't need to invest that much more once they have got some critical coverage. So you will see later that the profit pool will also catch up with the top line growth. I think it's a phase and it's a matter of time before that happens.
Mahantesh, closing comments on how one should really approach AMCs as a pack, not denying that there is definitely long-term value?
So I think we should wait for the EMC stocks to correct a bit furthermore. As it is, the market is now going through a phase where it has topped out, I would say, and there would be some kind of consolidation that will be happening. So for EMC stocks, that would mean a degrowth in terms of their valuation. So await a valuation correction before you get into any of the EMC stocks. While from a purely safety perspective, AMC stocks offer great comfort for investors. That means they are not the kind of stocks who see volatility in their earnings and therefore a great deal of dip that may be witnessed in the stock prices. So that comfort being there, you just await a small correction before getting it into your portfolio.
Okay, Mahantesh, Sunil, both of you, thank you so much for taking the time out and analyzing what's going on with the AMC pack. On that note,